Welcome to Trading Lounge and the US indices for Wednesday, April 20th. Now, we've got a bullish count and a bearish count, and this is the bullish count where we see up for one and back for two, up for one and back for two. And in this case, we will just continue to the upside here. So that's that case. Now, if I were going to go long here, then we mentioned yesterday that you can go long because we could see the low, and you can go long for a while. That's not a problem. But longer term long, we would need to see at the 500 here to just clarify it. We would need to see a classic trading levels pattern. So if that was the 4,500, we would need to see the arrival, the reaction, the first high above the level. It's this one that's important, and then we can work down from that high. We can go long above that, we can go long above here, or we may get a better entry over here. If it's going to be bearish, it's going to fail at this point and then drop from here. So this will just draw the line in the sand at that point, because the bearish count we've got here, which let me go to here. Let me just bring this in here a bit just to make it a bit simpler. So in this case, we're looking for a larger picture to the downside. So I won't get into this being wave one would need to be at least another degree higher, but that's okay, not to worry about that at the moment. But in this case, we're looking for an A wave here, an A and a B and a C wave here for the B wave, and then 5 waves down for wave one here. It could be, if we go into WXYs, it could be wave A here as well, but that doesn't matter at this point as well. So we'll either have 3 waves down, as I mentioned before, a 5-3-5 structure coming down here, or we'll have 5 waves coming down. But that's something we need to look at if proven, if this particular bear structure proves correct. So in a nutshell here, once again, if we just sort of open this up a little bit here, in both cases we can expect the market to rally to the 61.8% mark there and either find support or fail at that point, which would leave the 4-5 here right on the nose here, which is fantastic. So we can use that. We can see that it's important here, and that's how we would view it at this point. So we'd need to get support on this level. So they're the two counts. Which one do we give a bias to? I think that we'll just go with the evidence when it comes. That will be the best way. So with that in mind, let's go in and just pull this apart here and just start to work out what we need to do at this point. So as I just mentioned, from the top of the market here down to the low here, in this case it's got the bearish count here, but it doesn't really matter. We could look at this here as an A. We could look at this here as an A wave here, and a B wave up here, and a C wave down here. So we could squeeze that in, right? It's not the thing. So the best thing for us to do is, this is the 4-5 here. If we get a classic trading levels pattern at that level, which will mean that we will need to get support like this, we'll need to see the arrival, because when it arrives there, it's going to be sold off. It's just natural, and then to push up at this point, and then we'll get the ABC. So we'd need to take it from the top here or here or here. And we'll talk about that when we get there. So in a bit of a nutshell, this move that we're seeing, so this is the 61.8%, and it's a little bit like this here. We wait for the high here, and then we wait for the second high, and we go along at that point. But if it's going to fail, it's going to go down. At this point here, if it's going to go up, it's going to go up, and we'll be triggered in at that point. We talked about being long here yesterday, but I mentioned that I'll just leave that to you guys. You can just trade above this level and this level. Now, this is a little bit complicated here. So I just thought, if I bring across the SPY the SPY here. This is just 10 ticks. So this is the move down here. In this case here, we can see pretty much a straight line moving up for wave A here, and then we'll look for coming back for wave B and then going up for wave C here. Now this will be because we got 5 waves here, that means we'll get a correction and then we'll get another 5 here. So this is where the classic trading levels pattern will come in. We'll have the arrival, the reaction, and then we'll have the first high above the level. And if it's going to be bearish, it may not do this, but if it's going to be bullish, it will need to do this. And then we'll see here an A wave, a B wave, and a C wave here. Now this is where it gets interesting, because we'll go long above the top and we'll go long above here, but this is where it gets interesting, and it can just come back here and hit the level again and drop down at that point, a bit like over here, not sort of sit up there on that. So we look to go long above this one here and above this one here. That's the the long side of it all. So yes, carrying on from yesterday, we look for a call to low in place, looking for the bounce, and we've got the first leg here, which is in an impulse wave. That means we'll get a correction and then another move up here, but we need that to verify to go long. So just coming back to the S&P here, we've got a little bit of a spanner in the works in this particular instance here. So first of all, this is our level up here at the 4.5 here, and we're still away from that. So if you have a look at the stock video, in most stock videos we've got this here as wave A, and we're looking for the wave B to come back, and then we're looking for the wave C to come up here for wave 2 here, or another bullish move to the upside. Now this here could be counted in different ways. We can look at it, well, we could look at it as wave 1 here, and a little A, B, C for wave 2 at this point. We could probably bring that over, but we're probably better off looking at this as 1 and 2 and 3 and 4 and 5 here. So we could look at this as the third wave here, and a fourth wave, and a fifth wave to come up here for the A wave up this point. It doesn't really matter at this stage. Or we could also look at it, just to put another spanner in the works, we could look at it as wave A here, wave B here, and wave C here, and we're already done and dusted at this point. We're finished. But I don't think that's the case. What I need to do is I need to look at this whole market, all of this rally here. I need to look at it as the A wave, because I know where all the stocks are. We've just done a video on the stocks, so we need to look at it in this light here. If this was going to be the case here, then we'd be looking for an A wave, a B wave, and a C wave here, and then another move to the upside, looking at 5 waves into that move. So it's that first high above the level there that's critical at this point. And then we look to go short on these lows here, and now we'll look for that short to go onto the wave B here when it comes into play, but we'll leave it here out of the way for the moment, and we'll allow this to get established. And we'll also look for trades on the turn here as well. Now it kind of gets interesting here, because let's just assume that this plays out and we get a move up here. Well, this a C wave or an impulse wave to be bullish, it's going to be in 5 waves here, right? So it'll be 1, 2, 3, 4, and 5. It's normally, when we look at this when we look at this pattern here, this is normally wave 3 here, wave 4 here, and wave 5 here at any degree of structure. Okay, so it could be, you know, could be at this degree, or it could be daily or weekly or monthly, or if you want to work in Elliott terms, it could be any of those degrees. Now, the thing here is that if it was going to be bullish, it would have a 3-wave move here, and then it would be bullish from that point. That's why we go long at this point here, because it's at that point that is the safe trade. So what we could say is that after 3 waves here, well, then we could also look to go short here as well. Because when this moves back up here, it would move down at that point, and if it's beyond 3 waves, well then it must be some sort of impulse wave. So it can be down for 1, back for 2, down for 1, back for 2, and then down into 3, 4, 5 and move that way. So, but you need to be able to count those 5 waves there for that. Okay, let's move along a little bit. This is the triple Q here. So once again, in this instance here, we are looking at, we talked about yesterday, looking at, we counted 5 waves down here, 3, 4, 5 for 1 here, and then we're looking up for the A wave here. So in this case, it looks quite nice as wave 1, 2, 3, 4, 5 here. We could get one more little move up here, but either way, at some point, we're going to get a correction on that structure, which will be the B wave, and then 5 waves up here for the C wave at this point. And there will be, if it's a corrective move, wave A and wave C will be roughly the same length here as well. And we'll move this short trade up over to here, and we could also bring it up to this point as well. But we'll also be using these levels here for entries on the long side or the short side tomorrow. And the NASDAQ will be a little bit different down here, but that's why I'm just showing the triple Q here for this. So it just sort of cleans it up a little bit. So it's very much like the S&P 500. In this case, I'm counting it as wave 1 here with an A wave, an A, B, C for the B wave, and then down for the C wave here, then 1, 2, 3, 4, 5 here for this. So in this case, we're still looking for the A wave. The A wave is in, so we're looking for an A and a B and a C wave here, and then another little move up here for that. Once again, we talked about these levels here, so we can go short under here. We can also expect the market to pull back 50–60%, which will take us sort of into the, the 14,000 at that point there anyway. So that's all good. If this becomes the retested resistance here, then we'll need to look at the short side at that point. So if we get something like that at the 14,000, we'll take the low here and then the second low to short. So if the 14,000 becomes the retested resistance, the 61.8% is just below here. So it's okay for it to come down. So don't go shorting just because it's gone through. You definitely need the market to come down, bounce off the 14,000, come down, bounce off the 14,000, and then move below, and then move up. And if it breaches that low, well, then you can short at that time, but otherwise it's just going to reverse and move up at that point. A bit like this here, it moves through here, goes back up and checks and moves through here, so you can short it under here, and then you can short it under here for that. And if it doesn't get breached, well, then it just moves further up at that point, which we expect it to do. So that's the NASDAQ, and this is the ETF for the Russell as well. So once again, in this case, we've got a nice clean move up here, but that's not the low here. This is the low over here for this. So some of the stocks are like this as well. I think Tesla is like this. So Tesla and Amazon, by the way, they're kind of in their rallies for their wave 2s or wave Bs up here. They're more advanced than some of the other stocks. There's always leaders and followers. So our eyes will be on Amazon and Tesla within all of this space. So let's just look at the Russell, which will probably be, oh no, the Russell's the same as well. We've got wave 1 here. We've been working through an A wave and then an A, B and C wave here for the B wave, and then we're looking for further upside here. So this might be a little bit more advanced, this one, so we'll just keep an eye on this. It started its correction much earlier than the other stocks as well, so it'll be interesting to see how this sort of plays out here. But as an A wave, a B wave and a C wave here as 1, 2, 3, 4, 5, let's see what it goes like from here, because any move above, another little move up here, and any move above that would create a bullish move at that point. So let's just see how that plays out here for that. Alrighty, I'll leave it all at that, but just to recap, bringing the SPY across because it's nice and simple. We've got the A wave, we're looking for a B wave, and then we're looking for a C wave to move up here. On the SPX, if you're sort of searching for these, which is the low here, it does count as 5 waves from that top down to that low here. And this is the low. If you look at the SPX, then you'll be able to see that. But it's only there by a point or two. But yeah, that's it. You know, yesterday we were looking for a bounce. We've got our bounce. It's quite clear in some cases. We've seen it in the stocks. And we're looking for the B wave and the C wave. So we're going to be looking for the short trade and we're going to be looking for the long trade. But the long trades need to be at the 450 here for the SPY and 4,500 for the E-minis and the S&P and so on. Alrighty, I'll leave it at that, and it should be interesting tomorrow and the next day because maybe tomorrow we'll get a bit more of maybe tomorrow we'll be up here somewhere, you know. So it'll be interesting to see how all this looks at that particular point in time, or yeah, what developments have been made, and hopefully it's nice and easy. And most times when it's an ABC, it's normally pretty easy. It's only in wave 4s that things get complicated. Alrighty, I'll leave it at that. Cheers.